Hello, welcome to the European Open briefing for Wednesday, August the 9th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So there's quite a bit of a risk aversion in financial markets this morning. This comes after fresh escalation of tensions between the United States and North Korea. Yesterday, President Trump said that any threat by North Korea would be met with fire and fury, and North Korea responded to this by saying that it could strike the US territory of Guam in the Pacific Ocean. So this has unsettled financial markets. We're seeing strong demand of safe havens such as the yen and gold, and the dollar, though, is down against the yen, hitting 8-week lows. In terms of other major currencies, the pound is doing relatively well against the US dollar as other currencies struggle amid the risk-off we've got in the markets, and in commodities, despite a number of what you would expect it to have been positives for the oil market following yesterday's OPEC non-OPEC meeting, where members reaffirmed their commitment to the output deal. Plus, we had a big drawdown in US inventories. We're seeing oil prices remaining pretty much range-bound. But let's start with gold, actually, because we can see that yesterday we did have quite a big slump in gold prices. This came after the US dollar surged on the back of strong US data, but then this quickly reversed. You can see gold prices shooting upwards, approaching $1,270 an ounce, near last week's 7-week highs. And this comes, of course, what's happening now with North Korea, where North Korea has threatened to strike a US territory. Yesterday, President Trump responded to North Korea's latest attempts to develop a miniaturized nuclear warhead, which, according to some reports, North Korea has already its latest missiles tests means that it now is capable of putting a miniaturized nuclear warhead in its missiles. President Trump said that any threat would be met with fire and fury, like the world has never seen. And of course, North Korea was, of course, going to respond to this, but it's too early yet to say whether or not this latest tension will lead to anything, but in the meantime, financial markets are in pretty much negative territories. US stocks yesterday reversed lower. Asian stocks this morning are also are down, and we're seeing the yen, the Swiss franc, and gold all up this morning due to safe haven demand. Looking at the US dollar now, we can see that dollar yen. There was that brief jump upwards after the US JOLTS job openings before it quickly reversed lower. We can see it did touch an 8-week low of against the yen of below 109.70, 109.67. Yesterday, we just have some positive data out of the US. The JOLTS job opening surged to record high. In fact, in June, hitting 6.16 million versus expectations of 5.775 million, and up from an upwardly revised 5.70 million in May. And this is further evidence of a tighter US labor market, which could potentially still lead to another rate hike by the Fed this year, but for now the risk-off is pretty much what's impacting currency markets. The dollar index yesterday, it jumped to 93.88 after the US data before touching a low of 93.50. Today we can see the dollar index isn't as badly as affected as the dollar yen due to other currencies falling against the dollar this morning, and one of that is the euro. Of course, the euro was down from yesterday after the US data. It did drop sharply below the $1.18 level, hitting stopping just shy of the 1.17 level. It has firmed a little bit this morning, but the pound is doing much more better against the US dollar this morning. That's because the pound had fallen quite substantially in recent days, particularly against the euro. Yesterday it had touched a 10 months low, so now we're seeing a bit of a an easing of that downfall for the pound, but overall the outlook for the UK currency remains rather bearish. Yesterday, well, this week rather, we had a number of data on consumer spending, which support the view that consumer spending in the UK is slowing. We had data from the British Retail Consortium, as well as spending numbers out of Visa for the UK, and so it looks like UK consumers continue to suffer a wage a squeeze on their disposable incomes due to very low wage growth and rising inflation. So that's that's negatively impacting UK growth at the moment. Moving on to the Australian and New Zealand dollars, we can see both currencies are down against the US dollar, particularly the Aussie. That's down 0.4%. It did touch a 3-week low of 0.7852. It has recovered a little bit to around 0.7880. We did have the Westpac Consumer Confidence Index. It fell to more than 1-year low in August. We also had home lending data for June, which it rose much less than expected. So all of this has hurt the Aussie this morning. We also had the RBA Assistant Governor Christopher Kent saying that a stronger exchange rate would have negative impact on growth, or Australian growth and inflation. The Kiwi isn't doing too well either. The Kiwi had already come under pressure from weak inflation data in July for the second quarter, and we've got the AUDNZD meeting tomorrow morning, so we're seeing the Kiwi extending its declines on expectations that the AUDNZD will warn against further appreciation of the New Zealand dollar, which is up 5% so far this year against the US dollar, but more recently it has fallen to 3-week lows. Quick look at oil prices now, because yesterday at the end of the 2-day OPEC non-OPEC meeting, the OPEC said that the laggards of the output deal, which are Iraq, the United Arab Emirates, Malaysia, and Kazakhstan, which haven't been complying as strongly to the output deal as other countries, they affirmed their commitment to the output deal. In addition, Saudi Arabia said that it will be making further cuts to its exports in September. We also had US inventory numbers yesterday for the week of July 31st. This was the private industry survey, the API. It showed a bigger than expected drawdown in US oil stocks. We got the official EIA numbers later today. So if that also is showing a drawdown, we might see it might provide some support to oil prices. But for now, investors appear to be focusing on the fact that the output deal is having little impact on reducing the supply glut. So that's why we can see this week oil prices have been pretty much range bound. WTI crude is currently trading around $49.14 a barrel. Looking at today's economic calendar, we did have data out of China for producer prices and consumer prices. Producer prices were in line with expectations. CPI, though, was slightly weaker at 1.4%. Later today, in the US session, we're going to have building permits out of Canada and wholesale inventory numbers out of the United States, as well as the weekly US inventory, oil inventory numbers. That's it from me. Thank you very much for watching, and have a great day.